Microsoft is scheduled to report quarterly financial results after the stock markets close on July 30th, 2025. And investors are asking me if they should buy this AI stock before it announces these quarterly financial results. I'll answer that question in this video. I'll also preview what investors should look out for from Microsoft in the upcoming quarterly earnings release, and I'll share with you my proprietary discounted cash flow valuation that calculates a fair value of this Hall of Fame business. I'll do all of that in this relatively short video, so let's jump in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so when Microsoft last updated investors, they told us that their overall revenue increased by 13% up to $70 billion. Their gross profit margin jumped by 11%, and the gross profit margin came in at 69%. Operating income increased by 16% to $32 billion, and their operating profit margin stayed at 46%, which is an incredibly robust operating profit margin for any company in the world. It's one of the highest operating profit margins of any of the companies I'm following. Some of the ones that are better, there are a few that are better in terms of operating profit margin, include Visa, MasterCard, Taiwan Semiconductor, Nvidia, and there's a few others I can't think of off the top of my head. But Microsoft is definitely up there among the leaders in terms of the best operating profit margin. And it's even more impressive when you combine with revenue growth and operating profit margin. Microsoft surpasses Visa, MasterCard in revenue growth, to be sure, although Nvidia does generate better revenue growth and better operating profit margins than Microsoft, at least in the previous few years and for the next few years as well. Okay, so the big thing to look for from Microsoft is commercial bookings growth. The company has reported these figures soaring in recent years. You can see their commercial remaining performance obligations totaled just $235 billion in the third quarter of fiscal year 2024, and that's jumped all the way to $315 billion in the third quarter of fiscal year 2025, their most recently updated figures. Driving this growth is the company's artificial intelligence segments and the company's relationship with OpenAI and ChatGPT. The relationship between those two is that ChatGPT purchases nearly all of its computing requirements from Microsoft. Now, they've had such incredible and insatiable needs for computation that they've recently signed some deals with other companies outside of Microsoft, but still the vast majority of compute that ChatGPT uses comes from Microsoft, and they pay Microsoft for that computing requirement. So Microsoft has spent aggressively in building out their capabilities in this category. They told investors that their capital expenditures will total roughly $80 billion in 2025, and investors will want to get an update on that figure, whether or not the company is maintaining, increasing, or decreasing this figure. We got some early results in the semiconductor industry from Taiwan Semiconductor Manufacturing Company, which told investors that they were not seeing any decrease in demand from their customers. So those are companies like Nvidia, AMD, and Apple that are purchasing the GPUs from Taiwan Semiconductor. So there was no decrease in demand from those companies, according to what Taiwan Semiconductor already told us late last week. So since Microsoft is the one that's purchasing those GPUs, or one of the companies that's purchasing the GPUs from Nvidia and AMD, you can kind of make a loose connection between those companies and suggest that Microsoft's orders for semiconductors or for the GPUs that are going inside these data centers optimized for AI remains very elevated and is expected to remain very elevated going forward. And that's good news for Microsoft stock investors, because that means their conversations with customers suggest to them that they need more of this product, they need more of this service, and so they keep buying and expanding the availability. That's what you would want to see from Microsoft out of this next quarterly update. Everything going okay. You don't want to see, there's risk to the downside here, is what I'm trying to say. The increase in trade barriers as a result of President Donald Trump implementing the huge increases in tariffs threatens the global macroeconomic outlook. It's starting to create some major headwinds in orders and inventory and spending, and it threatens a recession in some of the biggest economies in the world. And so, what you want to see from Microsoft is no change in the outlook. You want to see things going as was expected to start 2025. You're unlikely to see an upgrade here, and the risks are to the downside. So, if we see everything going as planned, that's about what we can expect from Microsoft in the upcoming quarter. That's what I'm hoping to see from Microsoft. Remember, I've had this stock rated as a buy all year long. It's already up over 21% year to date in 2025. So it's already had a great year for Microsoft. I'd be thrilled if I was a Microsoft stock owner and it delivered 21% increases for 1 year. I would be happy for the full year with a 21% return from Microsoft, given that it's a relatively low risk investment, uh, generating a 21% return. So let's look at some valuation figures, starting with my proprietary discounted cash flow valuation model, which calculates an intrinsic value per share for Microsoft at $434. Current market price is $510. Microsoft stock is looking a little bit overvalued now following this huge increase at the current market price. Now, when I go to fiscal.ai, which is my preferred data source, and they save me a lot of time, let me tell you. And the forward price to earnings on this looking ahead is 35. So the highest it's been all year long. So the valuation is getting stretched, both in terms of the forward price to earnings ratio and my proprietary discounted cash flow valuation calculation. So this is a incredible business, one of the ones I rank up there in the Hall of Fame category. And so I've had the stock rated as a buy all year, even though the stock was never cheap this year. It had been fairly valued, and now with the price increasing by 21%, the valuation seems to be getting a little bit, slightly, I would say, overvalued. Not anything alarming, but just slightly overvalued. And given that, when you go into an earnings release, the stock price is more volatile than usual. So you're right now, over the next 8 days or so until the company announces earnings, the stock comes with a little bit elevated risk. So you have a valuation that's slightly overvalued, and you have risk that's higher than usual for Microsoft stock. So in combining all of those things and answering if you should buy the stock before earnings, I would say no. I would say this is a situation where I would be waiting for the earnings to come out, digest those new results, look at the new figures, and then look at the new valuation. Uh, Based on what happens. Does the price go up? Does the price go down? And then make a decision after earnings. I would suspect, now I still have the stock rated as a buy, and I would guess I'm going to keep it rated as a buy even after the earnings release, unless I see something very negative from the company's earnings results, or if the stock price jumps by such a large magnitude that warrants a downgrade, which I don't foresee happening here. I still like the company's longer term expectations and longer term prospects, even at the current market prices. I would still recommend this stock as a buy, but I would just time, if I'm, being trying to be precise in terms of the timing of my purchase, I would time it so that I buy it a day or two after the earnings results. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.